Delta tells you how fast you're moving, but it is gamma that is going to tell you how fast delta is moving. Gamma is the accelerator or brake behind it. Hi, I am Pranav VK, an NISM certified trader and trainer and your options trading specialist here at Stockshaala by Kotak Securities. So now let's understand what exactly is gamma. Gamma is the rate of change of delta for every 1 rupee change in the underlying stock. Let's say for example, the delta of a stock is 0.5 and the gamma of the stock is 0.1. In that situation, let's go to the whiteboard and understand what will happen to the delta when the stock increases by 1 rupee. So we have delta as 0.5 and we have gamma as 0.1. So for every 1 rupee increase in the stock, delta goes from 0.5 to 0.6 because gamma is 0.1. This specific metric that gamma equals 0.1 is super important, especially when the option is at ATM, that is at the money, because this is where gamma is highest. Now let's understand how the slope of gamma looks like. The slope of gamma is shallow at the start and steep towards the end because it is highest at ATM, whereas almost lowest at ITM and medium at OTM. Think of gamma as how steep your hill is. Let's look at the whiteboard to understand this better. Gamma is lowest at ITM as well as OTM because that is where the slope is shallow, and when the slope is shallow, the change in delta is also slow. But whereas when you're looking at ATM, this is where the gamma is highest because it has the highest steep, which means there is fast delta change. And near expiry, this steepness becomes a cliff. And that is why at the money options during expiry act super wild. Even a small price move in the underlying asset causes a huge jump in the options premium. Here's what gamma tells you. It tells you the rate of change of delta, which will help you price your options better. It also shows you how risky at the money options can be near expiry. It also tells you why hedgers care about gamma exposure, and finally, it also tells why beginners have to be cautious when they are trading near expiry. Here is a fun analogy to help you understand this concept better. Imagine that delta is your speedometer showing that you are going at 60 kilometers per hour, and gamma is the accelerator pedal that you are pressing on. The higher the pressure, the faster the car is going to go. So if you are on the normal road, then you're pressing at normal pressure and the car is going at normal speed. But when you're on a racetrack, that is just like expiry, one tap and whoosh, you are flying. Here are a few misconceptions regarding gamma. Traders think that gamma is necessary only for big traders or institutions, but that is not true. It is required for every trader who is selling or buying at the money options. Another misconception is that higher the gamma, better it is. It is not the case always. Higher the gamma equals higher unpredictability. And the biggest and final misconception is that gamma is fixed. Not at all true. Gamma changes with the time to expiry as well as moneyness. So here is a visual summary of gamma. Gamma is lowest at in the money as well as out of the money, but whereas it is highest at the money options because the slope is steepest at this point. And that is why during expiries, at the money options play wild, and especially if it's a weekly expiry, then all these options trade very wildly. So you have to be very cautious as a trader and make sure you're following all the risk management techniques. Let's do a quick recap of what we have learned so far. We understood that gamma is basically the rate of change of delta. It shows you how fast your premium is going to react to every movement in the underlying asset. We also learned that gamma is highest at the money and when it is near expiry. And finally, we also learned that gamma affects both buyers as well as sellers if they are trading at the money options during expiries. Delta is the driver. It gives you the direction. For a call option, if the underlying asset is going up, the call option premium also goes up. Whereas for a put option, if the underlying asset is going up, then the premium comes down. But gamma, it is the one holding the pedal. It shows you how fast that delta has to move up or down. Understanding this concept not only makes you smarter, but also a profitable trader. In the next video, we are going to talk about the next option Greek, that is Theta, which is your silent timer on your options. It is decaying slowly right now as we speak. Go ahead and like this video if you understood what gamma is, and subscribe to Kotak Stockshaala, where complexity meets clarity. You're watching Stockshaala by Kotak Securities. I am Pranav VK, and I'm going to see you in the next video.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.